So, took a couple days off. Summer. Don't gotta trade every day, especially in the summer when it's garbage. But getting back into it, what's changed, since I've taken time off is really nothing. You're still trying to do the same thing, right? ES is still trying to, find an aggressive bid above this balance range to push the market higher. I would strongly discourage, at least in my own trading, just fading this move just because, it doesn't seem to have any conviction. Keep in mind, there has been no volume in this market right now. It's it's the end of summer, right? It's what you should expect to see in the indexes, especially. So, as this move is trying to break out, one thing I'm always looking for is the retest of that balance range. So when you break away from a balance range, the highest odds play is to have a retest back to the balance range high. And that's just like any other, level or structural reference that you have, is when one side overtakes the other side, you expect to see that battle take place again. So in this case, buyers took over the sellers. You want to see the sellers push back towards their level to try and get back below it. And you want to see buyers try and reclaim that level as support. So for me personally, I just don't see anything for ES right now. That's kind of why I've taken, in all fairness, Tuesday wasn't, I didn't want to take it off, but I got dragged out shopping, which is what it is. But yesterday, I'd rather go golfing than sit here and watch paint dry. That's just my personal opinion. But as I'm watching this, you're getting like 14-point ranges right now. I mean, there's some good trading in the first 2 hours. Past that, I think it's pretty crappy. And it's just best to kind of stay on the sidelines until something actually takes place. And for me, that something is, waiting for potential liquidation to take place for a possibility to find a better area to buy. So that's where I'm at with ES right now. It's pretty clear what's happening in ES. It's just a slow grind up. Value is building higher since the 9th. You're getting prominent point of controls almost each and every day. And it's really just tight ranged balance. So as we come into today, CPI hit yesterday. You had the big reaction in Globex, obviously, across the board, the big ram into the open. And since then, there's been no follow through, no carry, right? So until they, again, convince us on the buy side that they're willing to buy this market up aggressively and really confirm this breakout from balance, you have to really keep in the back of your mind that the strongest odds still, look to having potential liquidation in the market for new buyers to enter. Now, when we're trading on such low volume, it's important to recognize, the information that's actually giving us. And to me, that information is we're just not trading with smart money right now. We're trading mostly against retail and smaller, firm, whatever you want to call it. And there's just not a lot of big money doing business, which again is not surprising, right? We're at the end of summer. It's the slowest part of the year. And it's not the time to, aggressively go at the market. Not in my opinion, at least. I think there'll be plenty of trading times come trading season. We're not in the trading season right now. There's one thing about the market is, and I've said this before, just because each and every day you sit down at your computer doesn't mean you have to be involved in the market. If you're a full-time day trader, there's other perks involved with doing that. And some of those perks are the fact that if you want to go golfing on a day and just not watch the market because there's nothing happening, go golfing. If you want to take a week off and go camping, do whatever you want to do in the summertime. Because let me tell you, when we get back to business in the coming months here, I think there's going to be some great opportunities and you're going to want to be in front of your screens more often. So don't burn yourself up, watching this junk and thinking you need to be in front every day to make money. So with ES, like I said, really just continue to watch, the all-time high. How's the market responding at the all-time high? We're getting a lot of poor references still building towards the all-time high, and that could potentially be a sign of exhaustion. Now, just because it's a sign of exhaustion doesn't mean that I want to position myself for a short side trade. I'm still in the bull wagon, I think, like many should be. I'd rather wait for a better opportunity to get my money in so that, the odds are greater in my favor. Right now, yeah, I could short this market or I could get long this market, but where are the odds really in your favor, right? You're really just, hoping for the best at that point, and hope is, has no place in trading. So for ES, I'm just a watcher probably today. I'm probably a watcher in all the markets, but we'll get to the other ones here as well. NQ, this is the only reason I say I might not be a watcher is I find NQ is the most interesting market right now. I think it has the best opportunity to be a tradable market right now. And why I say that is based on what's happening on the day time frame. Now, we've talked about the trend multiple times, and we're pushing back into that trend line now. So what we want to see if you want to be on the buy side is you want to see a bid start to come in with this trend line against the 20-day moving average, okay? If those are to break, we already know our target is the downside trend, which is the purple line, which at some point, unless we get some big collapse here, today or tomorrow, would be a short, over the next couple of weeks, your 50 is going to be sitting somewhere right close to that trend line, which gives it even more power to buy it. So, where I'm at right now is I'm really monitoring NQ here to see if they're going to find support. And the easiest way for me to do that is to simply take a look at my profiles and say, if the market can hold 932, I want to be on the long side. If the market can flush 932, I want to monitor the market for potential liquidation or a new opportunity to get into it. Now, for me, like I said, if it breaks 932, you push back down. The retest, which is what I'm always looking for, the retest, the reclaim of this as resistance would then potentially bring in a short side trade. So first and foremost, yesterday's low, I think, is a great target to get long against if the market gives it to you, but especially this 52 to 32 area is an area I expect to see a bid step into the market. So above this level, I need to stay long bias until they break below it. I think it's, detrimental to think that the market's just going to, sell off just because it's spent a ton of time here at the 15,000 mark. And it's really done a good job as of right now of continuing to find a buyer there. So for me, NQ, I think is going to be the most tradable market today. If it does give a trade, and that trade could potentially come somewhere close to that 52.32 level, which I think is a great opportunity with risk involved. So that's what I'll be watching on NQ. For me right now, I still believe NQ today, as I went through my early morning stuff on my own, is probably going to be the best tradable market. Taking a look at R2Y now. So R2Y, nothing's changed for me. I still believe 2320 is the test. I still think that's the target of any kind of trade here. Now, what would change that again is something below 2160, a flush below 2160. Not even on the daytime frame. I'm not worried about the daily lows. I'm not worried about any of these lows. As you can see, daily lows have been taken out and you just rebound right back up, right? What's more important to me is how they respond at the 21-day moving average on the daytime frame. They're trying to take the 21-day as support. We talked about this on Monday. When a market breaks above, the first sign of potential change is seeing the 21-day go from being resistance, flush below, back below it, then more resistance here, break back above it. Change will come if they push into the 21-day and find support, because what are we looking for right now if you're long is you're looking to see the 50-day finally give up. You're looking for that resistance to finally give up, and that will allow the market to start its move back up. First step always on R2Y, nothing has changed. First target 2280, secondary target 2320. So we have some great opportunities to monitor R2Y today and really get ourselves in a good position for what potentially could be a great trade coming into the trading season. When I'm watching it on the profiles, now, as I'm watching the profiles, we've had this 2244 level and this 2226 level for quite some time now. 2244, of course, like I mentioned before, has the 50-day sitting kind of right above it, which is helping. But that level in itself has worked as very, very good resistance here, right? Very good resistance starting on the 8th, then the 9th, then the 10th. It was very exacting as well, right? They were selling exactly from that level. Now, what will show a short time frame change on the day time frame is potentially pulling into that and holding it immediately. Now, today, what I would be looking for in R2Y, if I was to get, long in the contracts, obviously I'm still long on the ETF, but if I'm looking to get long on the contracts, I'm really just looking for any retest of 2244 that holds yesterday's low, yesterday's M low, which is at the open from yesterday. If buyers can do a good job of holding that level and holding that reference, I believe the opportunity is there for them to push against the 50 either today or tomorrow and potentially break through it. So I think R2Y will be a great market to monitor today, and it may in fact, offer up some good trades. So that's where I'm at coming into today. You know, like I said, I think the ES is really a nothing market today. It could do this, it could do that. I'm not sure. One thing we do know is the ES is very tied to the Dow right now. So as the Dow moves, the ES shall move with it. And if that does break away and change, you may see the ES pair again with NQ or RTY. So for me, ES is a monitoring market, not a trading market today. NQ, the most tradable market as far as where it is right now. RTY, the secondary most tradable market. And we have some great opportunities to monitor levels, resistance areas, support areas to make really good educational, and predictive type, decisions on how the market could or may react based off of our risk. So risk is there in NQ. Risk is pretty much there in RTY. When risk is predetermined, it gives you a better opportunity to trade and gives you a far cleaner entry into a market, knowing where you will be wrong. So that being said, I will be back again tomorrow for Friday, of course. And as always, trade well, trade safe. If you enjoy these videos, please subscribe to my channel. Hit the notifications thing or leave me a comment and I will respond. With that, have yourself a wonderful day.